Hello, I'm Kevin Ball from FXTrading Company, and it's a continuing weekly look at the US dollar that we've been looking at over a number of weeks. If we look at our first chart, which is a chart that we looked at on the 27th of September, it's a weekly chart, and it was detailed in that recording that there could be an imminent break back above the price level of 99.37. If that was to occur, the chart would be relabeled with the possibility of the E wave of the B wave high forming its own ending diagonal, and you can see just on this chart that we had labeled from the wave D a further A, B, C, D and E of wave E into the high. Now, we've been staying with the US dollar for a number of weeks because it is a difficult position, and it is a very educational chart to be looking at and working over the coming weeks. But as a company, I've resisted buying the US dollar. The price today is at 98.83. If the dollar fell to 97.77, that's the same price level as December 2018. So in other words, if you've been holding long dollar for the year, you've had absolutely zero return, when that is not the characteristic of a third wave. If we look at our second chart, which is the US dollar weekly captured on the 4th of October, being today, price has broken above the 99.37. The upper trend line, which are connecting waves A and C, has been broken for the fourth time, only for price to reject immediately below. The term throwover is still very valid. The thick black line, the trend line on the RSI at the bottom of this chart, is showing resistance as the AC trend line does on price. So the trend line on the price, which is connecting waves A and C and projected forward, is showing that resistance. Trend lines correctly drawn on price will often be identified in momentum if you're using RSI. Now, the thick black trend line on the RSI is showing divergence against the price highs, and divergence is the single most indicative characteristic of our. So to clarify this point further, the end of what is labeled as our wave 1 on the 17th of August, the RSI reached a reading of 62.18. Now, this hasn't been passed despite the successive higher prices that have been identified in price. So the momentum from RSI has identified the last impulse move, which is identified as being the 17th of August last year. If we look at our third chart, which is a daily chart of the US dollar captured on the gain today, the 4th of October, I've highlighted here wave D in red at the bottom. That is our wave D of our A, B, C, D and E for our ending diagonal. And we can just look at the internals of wave E. We've got a series of threes building upon each other, and you can see A, B, C, D and E, and again that red trend line of 99.37 broken. If we look at our fourth and final chart, which is the US dollar monthly, again this chart was captured today. Some very interesting points on this chart. The correction between the March 2015 and February 2018 is unquestionable in its form and perfection under the Elliott wave principle. The rally from the February 18 low to the August 2018 high is again unquestionable, followed by the small A wave. The current understanding is the possibility of a B wave high. If a C wave is seen in the US dollar, buying targets are at 50 and 61.8% of the prior impulse wave, at 92.65 and 91.8% respectively. But these price levels will not be seen for a number of months. So the questions are still remaining regarding the US dollar, but we will continue to watch this over the coming weeks and possibly look to identify the early stages of our C wave.